Pete McGuire joining us from XM. Pete, good to catch up with you on a Monday morning. So, what are you looking for at this point? We're just discussing perhaps whether we're surprised to see those equity markets continue to move higher. What are you looking at?
Well, they bounced, Andrew. Good morning, Nadine. Yeah, Friday night wasn't that bad, really, when you're thinking about, momentum to the upside. Last week was a good week for equities. I think that possibly you lead into Easter. I wouldn't be surprised to see a little bit further gains. We all know, the storyline as far as the Fed and what their announcements could be and what they're going to do with a $9 trillion balance sheet. So the momentum, opportunities have been incredible. And if we can mirror image as far as volatility, what we experienced in the first quarter and this quarter, then you may not need to trade for the rest of the year, Andrew. Those 2 quarters could be good enough.
What would you do with yourself, though, Peter? I mean, come on.
Nadine, you go to the beach.
Now, well, on a day like today in Sydney, it's looking pretty good, isn't it, for options, I can tell you. Look, when it comes to currencies, though, we talked about the Aussie dollar being relatively resilient. I mean, I was speaking with some people last week who were calling for the Aussie to be at around 84 potentially through this year. What is your outlook for the Aussie and why?
Look, there are so many moving parts to the Aussie. I'm worried about what happens as far as China and Evergreen and whether we see any capitulation there across the property market. So that could drag the Aussie lower. We've got strong demand for commodities, so that's a plus for us. Let's see what we do as far as our RBA and whether we see rate rises in the third quarter or the fourth quarter. But the move 9 cents from here is extremely bullish, but I'm not going to say it won't happen. I'd have to see the US dollar probably at that index maybe running a 92 handle, and we're just, nearly at 100. So the momentum for the US dollar, I think, is going to be a little bit stronger. So let's just wait and see. But it's going to be a very volatile, I think, 9 months leading into Christmas, and that creates opportunity, Nadine.
Yeah, and Pete, of course, that also comes down to Reserve Bank policy. And interested to get your point of view just as far as how markets are pricing this in at the moment, whether it's too aggressive. Certainly economists we're speaking to at the moment expecting perhaps a move in June, maybe even next month.
Well, you could do. I mean, it might happen. I wouldn't have thought that they'd do it with elections around the corner. Let's wait and see what the mood's going to be for the RBA. Maybe June, maybe July. Everyone's got an opinion on it. So in the meantime, that will create probably further movement to the Aussie, that wild whipsawing, possibly down to a 73 to 77 sort of range. And I think that's what traders, I look at from a trading perspective. We just want those short-term movements, and that's creating, again, those great times to be in the market, 24 by 5, 24 hours a day, 5 days a week, never sleeps.
Now, can you just talk to us about oil briefly before we have to let you go, because we are learning that the Aramco is selling prices for its crude oil, which will be indicating the level of demand in Asia, because we continue to have these supply shortages. But then you've got Joe Biden releasing 1 million barrels per day from the U.S. strategic reserves, which is nothing. It's nothing insignificant.
No, that's right. I mean, the price they're paying in the U.S. for fuel, Nadine, has been dramatic. Big uptick. So as far as, the consumer, and that's adding to the inflation woes, oil sitting 99, I've got Brent there at around about that 103, 104 sort of level. So I think that you could see further downdraft. The strategic reserves release from Biden, 180 days, 1 million barrels a day. I don't know whether it's going to greatly impact as far as global prices. And there could be further softness there. But I'm not suggesting that this month is going to be anything less than volatile for crude, because you can see whipsaws of 5 and 8% and 10% moves over a trading session or, a day or so. So, yeah, I think it's still going to be wild and woolly. And that's, again, incredible market to trade if you've looked at what it's done in the last 3 months, Nadine.
Yeah, and Pete, on top of that, International Energy Agency members now looking to add to that as far as drawing on those strategic reserves, although they can't seem to agree on when and how. And then, of course, you've got what's going on in the gas market at the moment. Germany indicating perhaps going to cut all supplies from Russia. That's going to have a significant impact if that transpires.
Well, who fills the breach as far as, it's not as easy as just turning a tap on, and Russia's got their whole agenda, what I'm reading, is to be paid in rubles. Maybe that might be washed across to gold. So even some of the people I'm talking to globally are saying it could even be Bitcoin, and Bitcoin at 46,000, that could do Mr. Putin a lot of good. So there's the issue that we face. Austria is a similar target as in the sense of mindset with Germany. So yeah, European. One good point is, Andrew, we're not in a depth of winter. We're coming into spring, and hopefully the draw as far as, residential demand for gas is going to be less from a heating perspective. But people have still got to cook and do all of those sort of things as well.